Are you a UK pensioner worried about changes to your state pension that could affect your financial future? Have you been hearing whispers about new rules supposedly coming into effect on July 20th that might dramatically alter how your pension works? Well, before you panic or get your hopes up, there's something crucial you need to know that could save you from falling victim to misinformation and help you understand what's really happening with UK state pensions right now. If you're concerned about your pension security and want to stay informed about real changes that could affect your retirement income, make sure to subscribe to our channel and hit that notification bell so you never miss important updates about UK pensions and benefits. Let me start by addressing the elephant in the room. Despite various claims circulating online and in some media outlets about significant state pension rule changes coming on July 20, 2025, there is currently no official confirmation from the Department for Work and Pensions or Treasury about any major pension reforms taking effect on that specific date. This is important because pension misinformation can cause unnecessary anxiety and lead to poor financial decisions. However, this doesn't mean there haven't been significant changes to state pensions in 2025, and there are ongoing developments that every pensioner should be aware of. What has actually happened with UK state pensions in 2025? The most significant change occurred in April 2025, when the state pension received a substantial increase thanks to the triple lock guarantee. This increase was substantial, with those receiving the full new state pension seeing their weekly payments rise from £221.20 to £230.25, representing a 4.1% increase. For those still on the older basic state pension system, who reached state pension age before April 2016, the weekly amount increased from £169.50 to £176.45. This translates to approximately £470 more per year for those on the new state pension system, which is a meaningful boost for millions of pensioners struggling with the cost of living. But what exactly is this triple lock system that determines your pension increases? The triple lock is a government commitment that guarantees your state pension will increase each year by whichever is highest among three measures: the rate of inflation as measured by the Consumer Price Index, average earnings growth, or 5%. This system was designed to protect pensioners from losing purchasing power and ensure their income keeps pace with the broader economy. The 4.1% increase in April 2025 was based on the inflation rate measured in September 2024, which was the highest of the three measures at that time. Now, you might be wondering why there's so much confusion about July 20th and supposed new rules. The truth is that the pension system is complex, and misinformation spreads quickly, especially when people are anxious about their financial security. Some unverified reports have suggested dramatic changes, including claims about new flat-rate pensions of £549 per week for those aged 60 and over. But these claims lack official backing and appear to be speculation rather than confirmed policy. It's crucial to rely on official sources like the Department for Work and Pensions and Gov.UK for accurate information about pension changes. What should you actually be paying attention to when it comes to your state pension? First, understand which pension system you're on. If you reached state pension age before April 6, 2016, you're on the basic state pension system. If you reached it after that date, you're on the new state pension system. The systems work differently, and the amounts you receive depend on your national insurance contribution history. For the new state pension, you need 35 qualifying years of national insurance contributions to receive the full amount, while the basic state pension requires 30 years for the full amount. Are you maximizing your state pension entitlement? This is a question every pensioner should ask themselves. You can check your state pension forecast on the Gov.UK website to see exactly how much you're entitled to and whether you have any gaps in your national insurance record that you could potentially fill. If you have gaps, you might be able to pay voluntary national insurance contributions to boost your pension, but there are time limits and specific rules about when this is possible and worthwhile. What about pension credit, and could recent changes affect you? Pension credit is a benefit designed to top up the income of pensioners on low incomes, and it's often underclaimed. Recent changes have aimed to make the application process simpler and increase the income thresholds, potentially making more pensioners eligible. If you're struggling financially, it's worth checking whether you're entitled to pension credit, as it can provide significant additional income and also opens the door to other benefits like help with heating costs. Have you been affected by the payment schedule changes that have occurred in 2025? While the amounts haven't changed beyond the April increase, the timing of when pensions are paid has been affected by bank holidays, with some payments being made earlier than usual. The The Department for Work and Pensions has confirmed that bank holidays can shift the distribution schedule for state pension and other benefits, so it's important to budget accordingly and not panic if your payment arrives on a different day than expected. What about the broader economic context affecting your pension? Understanding how inflation, wage growth, and government policy interact to determine your pension increases can help you better plan your finances. The triple lock system provides some protection, but it's worth understanding that pension policy can be subject to political changes, and future governments might modify how the system works. Staying informed about these broader trends can help you make better financial decisions. Are there any legitimate concerns about future pension changes that you should be aware of? While there are no confirmed changes for July 20th, pension policy is always evolving, and it's worth staying informed about ongoing discussions in Parliament and government about the sustainability of the state pension system. The aging population and increasing life expectancy mean that pension policy will continue to be a topic of political and economic debate. What practical steps should you take to protect your pension security? First, regularly check your state pension forecast to ensure your records are accurate and up to date. Second, consider whether you're eligible for any additional benefits like pension credit. Third, if you're still working or have the opportunity to work, understand how this affects your pension and tax situation. Fourth, don't rely solely on state pension for your retirement income if possible, as private and workplace pensions can provide additional security. How can you spot pension misinformation and avoid falling victim to scams? Be suspicious of claims about dramatic pension changes that aren't reported by official government sources. Always verify information through gov.uk, the Department for Work and Pensions, or other official channels. Be particularly wary of anyone contacting you claiming to offer pension advice or opportunities that seem too good to be true, as pension scams are unfortunately common and can devastate your financial security. What resources are available to help you navigate the pension system? The gov.uk website provides comprehensive information about state pensions, including calculators and guidance on how to claim. The Department for Work and Pensions has helplines you can call if you have questions about your pension. Additionally, independent financial advisors can help you understand how your state pension fits into your broader retirement planning, though be sure to choose regulated advisors. Looking ahead, what trends should you be aware of in UK pension policy? The government has committed to maintaining the triple lock throughout this parliament, which provides some certainty about future increases. However, there are ongoing discussions about the long-term sustainability of the pension system and whether reforms might be needed to address demographic challenges. Staying informed about these debates can help you understand the direction of future policy. The key takeaway for every UK pensioner is that while there are no dramatic new rules coming into effect on July 20, 2025, the pension system continues to evolve, and staying informed is crucial for protecting your financial security. The April 2025 increase was significant and demonstrates that the triple lock system continues to provide important protection for pensioners. However, it's essential to verify information through official sources and be wary of claims that seem too dramatic or aren't backed by government confirmation. Remember, your state pension is likely to be a crucial part of your retirement income, but it's just one piece of the puzzle. Understanding how it works, staying informed about changes, and taking steps to maximize your entitlement can help ensure you have the financial security you deserve in retirement. Don't let misinformation cause unnecessary worry, but also don't become complacent about staying informed about legitimate changes that could affect your pension. If you found this information helpful and want to stay updated on real pension changes and other important financial news for UK retirees, make sure to subscribe to our channel and share this video with other pensioners who might benefit from accurate, reliable information about their state pension rights and entitlements.